This conference will now be recorded.
Okay, in the last session, we completed the meter reading and the entry of meter reading results for the energy meter and the demand meter. Now we will execute the billing. So if we go to ES31, latest installation for division 60, 270, billing periods, billing order. So billing order is due on 30th of January. So meter reading results have been entered for 30th of January. So we will do the billing for this particular date. So go to EASI BI 30/01 2020 installation 270, execute. So bill has been completed. The billing document is 2380. So go to installation. 2380 billing document. And according to line items, we will have certain number of items. 7 items are there here. So the billing period 01 2020 30/01, demand price 139, demand price key. Billing quantity, it has taken 24, that is a peak demand. Price is 20 rupees and the number of days of billing is 30. So the demand billing will happen demand, max demand into rupees per kW per day, that is 20, into the number of days of billing, that is 30. Net amount 30, 480. So here it has taken net amount as 20 rupees we have given. Let us set the price amount 139 demand price. Okay, we are given per 30 days. Okay, it's not per day. Fine. Now it's okay. That means our price is 20 rupees for 30 days. Okay, so per day how much it will be? It will be 20 by, or we can calculate for 30 days. So the maximum demand is 24 into number of days billing is 30 into 20 rupees per day. So we have to divide by 30. So it will come to 480. So the basic amount, the amount is coming here as 480. That is for the duration. Because I was thinking we have taken price per day. It's not so. So 20 rupees for 30 days. So 2 by 3 we can say into 20 into 24. Now we go to the second line item, that is the quantity rental price. So rental price here, it is 3,600 for 365 days. Okay, but now here you are taking it for 30 days. So 3,600 divided by 365 days per day. This is the rental value into 30 days of billing. So it will come to 295.89. The second line item. Third line item is the quantity billing. So this is a statistical quantity 650, that is the consumption, and price is 12 rupees. So it is coming to 7,800. Fifth is the line item for the lump sum energy. So lump sum energy we are given 500 rupees for 1 day for 30 days, and we have got a multiplication factor. So based on multiplication factor, 800 has been taken into consideration. That means 500 divided by 30 into 30, that is 500. and then we have a multiplication factor 1.4, I think. So we can check the factor, how much is the factor. So if you go to the billing and then rate category, display, Jet 600 is the rate category, facts. So factor, so you're going to factor as 1.60. Okay. So basically 500 rupees for 30 days. So 500 by 30 into 30 is 500 into 1.6. So it will come to 800 rupees. So the lump sum energy price has been taken as 800 rupees. And then finally, we have got the surcharge amount. So 500 rupees is for 30 days. So it is calculating. Usually it will show what is the price for number of days, and then it will show the amount for the actual number of days. In our case, both are 30 days. So it is going to come. The last item is the surcharge amount that is coming as 500. So this is how the billing has happened. Now we can go and create the invoice. We know how to create invoice. Basically, invoice is created for the contract account, and these items will be transferred to the invoice. So we have seen a case of a billing where we have added some more line items, and we have seen the energy billing, demand billing, lump sum energy charges, and the rental price. So 4 line items we have calculated. Now in all the situations so far what we have done, the billing was done basically taking into consideration of a device where the device is yielding the data for the consumption or the maximum demand. But there are some installations where we do not have a device. So in such case, how to do billing? The device independent installations are usually what you come across in street lights, telecom towers, where basically you have a fixed consumption happening for a particular number of days. So there is no need to measure the consumption because these are continuous constant rate consumptions which are happening. So in such case, we don't have to determine the value. In the street lights also, we take the number of hours for which we expect the street lights to run. We know the capacity of each bulb, and then for a particular region, location where number of street lights are available, we will calculate the billing. So there's no need to do any kind of meter reading. But in such case, how to fix the billing, the strategy. So basically, we have to define a new billing class, new rate type. Now, rate type, how to handle? Because so far what used to happen, we used to have a rate type which is permissible at the register level, or we have a rate type permissible at the device level. So rate category is at installation level, rate type is at the register level or device level, and then the rate is determined. But in this situation, there is no device itself. When there's no device, there's no register. So where will you enter the rate type? Because unless the rate type is available, the rate cannot be determined. Rate category will be in the installation, but there should be corresponding rate type somewhere in the data. Based on these two only, the rate can be determined. So how to fix or how to get the rate type first in the installation, and then how the rate determination will happen, that we have to see. So we will build the billing master data for this requirement. So first we will go to define a billing class step by step. So go to utilities, contract billing, master data, define billing class. So previously we have done Z600 as our household with single rate meter, Z601 smart meter. So now we will define Z602 or Z603. This is our facts billing. Okay, facts billing street light. can call it as facts billing, street light or facts billing. So all the information that is required for the billing will be gathered from the facts. We know by now what are the facts. These are the containers where we used to maintain the information on the operands. So whatever operands are going to come here in the billing, their value will be stored in the facts. So from no other place, the data will be maintained. So billing class is Jet603. Now we will define one new rate type. Define the rate type, new entry, Z603, rate type for facts billing, street light. Division is going to be 60 and our billing class is Z603. Previously, our rate type was valid at the register level, then device level. Now we are selecting facts level. Also, we have seen permissible at the interval meter. So now we will select at the facts level. Z603 already exists with the same key. So we will say Z604. So Z604 is the rate type and the billing class is Z603. Now we have to define the rate. In the rate, we'll have the variant program. And for the variant program, we have to maintain the operands. So what is the rate we have to use here? So there is a rate here, refval01. The rate variant program is refval01. When you use refval01, evaluate a reference value with a price. That means we maintain what is the energy we have to bill, the reference value in the installation. And for that, we apply a time-dependent price. And based on that, amount will be calculated. So we have to create two input operands, one with the ref value, one with the T price, and one with the amount. So now we will go to create the operands, define the operands, create. 60-20, we will say is the operand, ref val, that is the category, division 60. This will be normal usage. So facts level, continue, ref value for billing. The unit of measurement will be in kWh and then save it. 60-21, this will be time dependent price, T price. Again, facts level, time dependent price for facts billing. This is also per kilowatt hour. And then 60-22 amount, 60 street light amount, street light energy amount, and then save it. Now based on these operands we have created, we are going to define the rates. Go to define the rates, create the rates. Now rate, we will make it as Z604. Facts billing, street lights, division 60, and billing class is Z603. Now, previously we maintained the rate which is permissible at the register level. We have seen at the interval meter. We have seen at the device level. Now we are going to select the facts permissible. That means this rate what we are defining will be permissible at the facts level billing. Go to rate steps and our variant program is this 0021, 0011, 00. Input operand, it is the ref value 60-20. Input operand for the time dependent price, that is TDP, time dependent price for the facts billing, and then the amount 60-22. Check for the consistency and then save it. So we have created a rate as Z604. Then we will define one schema. Define the schemas, create Z604 facts billing schema, and then go to schema steps. Insert the rate, find out a rate which is permissible at the facts level. Facts permissible, Z604 is the rate available. Maintain the pre-sorting key. Check for the consistency and now save it. We will now put this schema in the rate category. Define the rate category, define Z604 is the rate category for division 60. RC for state rights. Outsorting check group and building schema is Z604 and then save it. Now we have to maintain the determination of the rate. Define the rate determination. If the rate category is Z604 and if the rate type, so we have defined a rate type as Z604, rate type for the facts billing, and then create the determination, create. Valid from 01/01/2019, and the rate is going to be this. But the question will arise from where the system will find out this rate type. Previously, it used to be found at the device level or at the register level. Now it has to be found at the facts level. So now we are going to define one more operand, which is called rate type. And for that, we will put this particular value. That means in the installation facts, we'll have one more special operand, which is called rate type. So for that rate type, the value will be assigned as Z664. So now we will save it. Create one more operand. Go to define the operands, create the operands. 60-23. Operand category here, you have to select the rate type. You can see here, there's one category, rate type, division 60. And then we will say rate type. So how to put this value, we will see in the installation. Now save it. So as far as the master data is concerned, we are ready with the complete master data. After this, we will create the premise installation and then do the moving. Usually the billing will be done on the municipal authorities because the street light amounts are paid by the municipal authorities. So there will be billing business partner master data for the complete, authorized partner and the contract account for them. And based on that, the contract will be created. But here we will use one of the existing contract account for making the move-in. Right now, we will set up the installation data. So go to technical master data, installation 270, premise is 239. So we will create a premise. Now here, premise and connection object are virtual because in all the cases, what used to happen, we used to have a physical building like connection object and then physical premise. And in that we have device location and then you are mounting the device. But when you are taking street light, the entire area will be considered as a connection object. And then entire area, we will have a premise, a virtual connection object, virtual premise, because there's no one particular building here or the premise. So let's say, for example, a particular area in the city, okay, Banjara Hills, okay. So that entire area is considered to be like a connection object. And then for that, we will have one premise. So the premise here is required only for the purpose of the move-in only, because for premise only, you are maintaining the installation, but as such, there won't be any premise available. Okay. So we will create a new premise as usual, copy from the existing premise, and then save it. So our premise 243 has been created. Premise 243 created. For this premise, we will maintain installation data ES30 60, and our premise is 243. Now we will take the billing class. So our billing class here is going to be Z603, and then go to rate category. It is Z604, and then we have to enter the MR unit. MR unit is just fine. Now, when you don't have device, what is the role of MR unit? Because basically the purpose of MR unit is to provide the scheduled date for meter reading and billing. So actually what happens in regular scenario, based on the MR unit, we create a meter reading order. But also in addition, it will create a billing order. It is a billing order what is required for billing, and meter reading order is required for entering the result. But we cannot do the billing without the billing order. So here we cannot create a billing order directly. You have to create a meter reading order, then the billing order is created. So in this case, what happens? As usual, you create a meter reading order, but it will not create any meter reading order. It will directly create a billing order. So only if the purpose of MR unit is here to provide a billing order for the billing purpose. Otherwise, there's no device and there's no meter to be read. Okay. So the purpose of MR unit is only for fixing the scheduled billing date by which date the billing has to happen. So now we will save the installation. Now we will create one time dependent price for the billing. So go to billing master data, select the prices, create the prices. Price category, quantity based, flat rate, rental, time dependent. Select the time dependent price. Currency INR, price type is standard. And then we will go to maintain the time dependent price for tax billing. Here, what it means, we are actually billing based on the price which is valid for the kilowatt hour and also for number of days. Okay, so you can maintain the price valid per kilowatt hour per 30 days, 365 days per 1 day. So we will say the price is something like per kilowatt hour per day. Okay, the per day means it may not be 24 hours, whatever the duration for which the consumption is happening. Okay, so we will take some price here as 20 rupees, some value. So select time category, time basis as 1 day, okay, per day, and then go to unit of measurement, that is kilowatt hour. Now, usually the capacity of the bulb will depend on the technology. Okay, so earlier you used to have the olden technology. Now LED have come. So basically, the idea is to record lesser consumption with the same intensity of light. The new technology bulbs or the street lights are supposed to provide the efficient lights, but at the same time consuming the lesser consumption. Okay, let's say for one particular bulb, the particular unit of measurement, we can also find out what is the capacity of the street lights. Street lights India ratings. For testing purpose, you can take any value, but you can also have some idea what with the street light capacities. 30W LED. This is basically capacities 30W, that is 30 watt. So in a day, if it runs for 10 hours, okay, evening 6 o'clock to next day morning 6 o'clock, we can take approximately 12 hours. So one bulb will run 30 watts into 12 hours, okay. So the rated consumption is going to be 360 watt hours, okay. 30 watt running for 12 hours. So it comes to 360 watts, that is 0.360, okay. The capacity of running is 0.36. Let's say in a particular area, we have around 500 such bulbs, okay. So into 500. So the total capacity for the area will come to 180 kilowatt hour per day. This is 1 kilowatt hour per day, but day is not running for 24 hours, whatever consumption for 12 hours. And our price is going to be basically 20 rupees, or let's say 12 rupees per kilowatt hour per day. Okay, so the amount will be 180 into 12. Okay. This is how actually it is supposed to calculate. So we'll maintain the price as 12 rupees per kilowatt hour per day. So I've taken per day basis, go to the history, I'll read from 0101 2019 till 31st 12 999, and quantity basis per kilowatt hour, the price amount is going to be 12 rupees per kilowatt hour per day. Okay, and then copy this and then save it. So we have created the price information as 140, that is the price key. Now we will update all this information in the facts. So go to ES31, select, go to facts. First important operand here will be the ref value. Okay, so select the reference value for the billing. Select here. Maintain state is from this. Continue. The entry value is 180. We will say 200. Okay, we calculated 180. Let us say 200 kilowatt hour. So the value to be billed is 200 kilowatt hour. That means for this particular area, when you are doing the billing every month, we take into consideration of 200 kilowatt hour. But this is for one day, so the value will be more actually. Okay, so what we are taking, say 30 watt running into 12 hours per day into, that is divided by, so 360 kWh. So 360 watt divided by 1000. Okay, so it comes to 0.36. Let's say there are about 200 lights, then it comes to 1500 watts. Okay, so basically here 30 into 12 hours, 360 divided by 1000, that is 0.36 kilowatt. Let's say 500 bulbs are running. Okay, this is 180 for one day. Okay, but the number of days of billing will be taken into consideration. So that means ref value what we're taking is for the entire duration, because here meter reading concept will not come. So into 30 days, okay, approximately 30 days, it will come to 5,400. So we'll maintain. Otherwise, we'll see when the billing will happen. Will it, because per day, yeah, number of days it will take, because number of days is going to come in the 30 days. So we'll maintain for day only. It is 200 what we have maintained. Come back and then go to the next operand. The next operand we have to maintain time dependent price. That is basically 60-20 ref value, 60-21 time dependent price, and then continue, valid up to 31st 12 999, and our price key is 140, what we have defined just now, 140, and then transfer. Now based on this particular quantity and the price, the amount will be calculated, but first the rate has to be determined. So how will the rate determine here? We don't have any device, so that's the reason what we have done, we have created one operand which is supposed to store the information about the rate type. So now we will select the next operand and select here the operand what we have defined, 60-23. Select here and then continue. Valid up to 31st/12/999, and whatever rate type you have defined, that will be available here. So the rate type is stored also as the fax information. Transfer, come back, and then save it. Now we can go back and see whether the rate has been determined. So rate category is there, billing periods, and then rates. So rate Z604 has been determined. On what basis? On the basis of the rate category, what we have, and based on the rate type, what we have maintained in the fax. So based on these two, the rate will be determined. Now we are ready for the move in. So this installation, we will do move in on 1st of January. So for the end of the January, we can do the billing. So go to EC50E 0101 2020. We'll take one of the existing contract account for the company code group. It is 5301 and installation 274. Installation 274 confirmed. So it will say this does not have a meter. Just for information, it will say this particular installation, no device has been allocated. So it's only for information. So there's no need to enter any meter reading data. Go to contacts, and then here we will enter ID for account determination 60, no meter reading, and then save it. So a contract is created here for the particular installation. Now we will go and check the contract is updated in the installation. So go to ES31. Billing periods. So here contract is available 283, or billing period is starting from 1st of January. That is the date of moving. The end billing period, we can find out. The billing periods will be starting from the date of 1st of January, but the valid from this, but the contract is valid from 20. So our first billing period will start from 0101, depending on the end of the meter reading date. That is the end of billing period. It will happen as per the MR order. So now we will create the meter reading order for the January. So only purpose of creating meter reading order here is to generate a billing order. So EL01 274 01 execute. So our scheduled date of meter reading is January 2020. So 30th of January 2020, and then create the order. So usually what it will say in the message, metering orders and or billing orders created. So in our earlier cases, what used to happen, metering order created and the billing order created. But here, metering order and, that means or, either and or. So here only billing order is created. So billing order will be updated in the installation. So if you go to ES31 billing periods, the billing order has been generated for 3001. Now we will execute the billing. So EASI BI 30 January 2020, 30 January 2020. Billing is completed and document has been outsorted. The billing document number is 2381. This is the billing document. So let us see what is the billing document created. ES31 document, select. So it has got only one line item. So 200 billing quantity, but the number of days of billing is 300. Okay. So the amount is coming to 72,000. How it is coming? 200 into 30 days of billing into 12 rupees per kilowatt per day. So it will come to 72,000. That means our facts information is stored for 1 day. In a day, considering 10 hours of consumption, all the bulbs put together, what is the reference value? And that is the basis on which the billing will happen. So here we have seen how the facts billing will happen. Okay. Now we have seen device related billing, register related billing, interval metering billing, facts billing, and demand billing, lump sum energy price billing. All these scenarios normally what you come across, we have seen. Now we will see what controls are applied on the billing documents and the invoice, which is normally called outsorting. The purpose of outsorting is whenever the billing documents are created, they are validated for minimum value and max value. That means usually minimum value is not an issue, but sometimes because of the errors in the price or something, it may go below minimum. Okay, let's say our lump sum energy price itself is 500 rupees, rental is 300. So if we expect value, either even if let us say zero consumption, which is not possible, or even if it is there, minimum they have to pay 800. But if the billing value comes to 300, that means something is wrong. Okay. On an average, our consumers are consuming for residential, considering even the season and 20% more, 30% more. Let's say we expect the bill to come at the rate of, let's say, 1,000 rupees, 10,000 rupees, or 8,000 rupees. But in one of the execution of the billing, it has come to 20,000 or 25,000. So naturally, it is deviating from the permissible max value. So if it is 100 rupees, 200 rupees here and there, depending on the value, they can release it. Okay. But if it is very high, then either our price might have been maintained wrongly in the installation facts, or there could be some other reason. So we have to investigate it, because if you go ahead with that value of the billing and then invoice is prepared, then anyway consumer is going to come back and saying this is a wrong invoice. Okay, because the average monthly billing is coming to 8,000 rupees, 6,000 rupees. Suddenly it has come to 25,000. Okay, so naturally the consumer will not accept it, and then we have to go back and then reverse the invoice, reverse the billing, then do some interim billing or control meter reading. The work will increase. So why not we check it in the billing level itself? So the outsorting check will help us to validate the billing documents for a predefined value, which can vary from consumer to consumer. So we create what is called outsorting check group. Okay. Let's say outsorting check group is 0001. Okay. This is for all residential customers. 0002 is for, let's say, non-residential customers. Now, whenever you define a rate category, in the rate category, we will enter the outsorting check group as 0001. That means all the residential consumers for whom the rate category has been defined, all of them outsorting will happen as per the rules defined for this particular group, that is 0001. And again, we do different types of billing. We do consumption billing, we do manual billing, we do interim billing, move out billing. In all these cases, we can maintain the validation depending on the type of billing execution what we are doing. So in such cases, the system will check the amount and then it will outsort if it is exceeding the amount. Outsorted means billing document is saved, but it is blocked for the invoicing. Then the end of the day, supervisor will check all the billings which have been outsorted. Case by case, they will study and then make the release if required. Otherwise, take the corrective action so that proper billing can happen. The similar concept also used in outsorting for the invoice. So now if the billing has been approved, why there should be outsorting in invoice? Okay. So theoretically, you can say either you are doing outsorting as the billing or the invoice level, but we'll do both. Let's say outsorting you're doing at the billing level. Sometimes you may do joint invoicing. That means we are clubbing two contracts or two different contracts of two different divisions, then you are creating an invoice. So in that case, we can also fix the outsorting value for the invoice as well. So that means billing individually happens for the each contract, but when you prepare the invoicing, it is for the joint invoicing. Okay. In the invoicing level also, the check will happen. But now here one question will arise. In case of billing, if it is outsorted, it will simply save the billing document and then it will give the report. It is outsorted, so somebody can release it. But how can you do it at the invoice level? Because if invoice is created, it has to be saved. If it is outsorted, then it is saved. The moment you save it, you are transferring the document to FICA. So the purpose is not served because the posting will happen to FICA anyway. The moment you save the invoice, it is going to post the document into FICA. Then how can release it? The question of release is only when the further process is yet to happen. Okay. In billing, outsorting happens means invoice will not happen. But in invoicing, if outsorting happens and if it is saved, automatically it will create a FICA document. So whenever you want to do outsorting for the invoicing, you must also maintain a simulation document at the invoicing level. So in case suppose it is outsorting at the invoice, it will not create a regular invoice. It will create a simulated document. And then simulated document will say this invoice has been outsorted. That means it is not transferring it to FICA because simulated documents are not transferring to FICA. FICA documents are created only if it is the actual invoicing. So then the person can check the simulated invoices which have been outsorted, release it. Then it will delete the simulated invoice and create the actual invoice and then post to FICA. So we cannot directly only maintain only the outsorting for the invoicing. You have to maintain a document type for the simulation purpose also at the company code level. But then how will the system come to know what is the outsorting group? In the rate category, we are maintaining outsorting group, but how that is relevant for billing. But then how will you do it at the invoicing level? So for that, outsorting check group will be maintained in the contract account. In the contract account, there is a field outsorting group. All the residential consumers will contract accounts will be assigned to one outsorting check group, and based on that, the validation will happen. So let us see how outsorting can be done. So first we'll go to the billing outsorting. Define outsorting check group for the billing. 0001 residential, 2 for non-residential. But this is only an example. We can define any number of outsorting check groups depending on the scenario what you would like to use. But we have to maintain these outsorting check groups in the rate category. Suppose you are creating rate category for subsidy customers, one outsorting check group, residential consumers, one outsorting check group, interval meter customers, one outsorting check group, like that. Non-commercial, non-residential also we can maintain. It depends on the categorization of the consumers whose validations will happen on the same comparison purpose. Now define checks for the outsorting check group for the billing. Validation parameters. 0001 is for residential, see the detail. So here we are given billing validation for the amount. Okay. Parameters. Minimum amount receivable is 200. Maximum amount is 12,000. So if anything is exceeding 12,000, then we will say it will be outsorted. And credit memo, it should not go below 2,000. Maximum credit memo, we can give it only 2,000. That means if any credit memo has been prepared more than 2,000, it has to be outsorted. And these are maintained for the billing transaction, periodic consumption billing. So likewise, you can maintain for interim billing, final billing, period end billing, manual billing, okay? So depending on the scenario, we can maintain this. So as you know, 12,000 is the amount. This is the amount. Now we will go to the invoicing level. So go to invoicing. invoice processing, outsorting for the invoicing. Define outsorting check group for the invoicing. 0001 for residential, non-residential, 0002. Define checks for the outsorting check group for the invoicing. So 0001 is this thing. Minimum amount receivable is 500 and maximum amount receivable is 4,000. Now here, just for testing purpose, we had put, let's say maximum amount permissible is also, let's say 14,000, something like that. And then we will, and this is for the non-residential. So I maintain 12,000 and 14,000 and then save it for testing purpose. Now go back to invoicing execution. Allocate document types to print document. Select here. Now let us locate our creation reason as 01, company code 6000. So you are given here FA, that is a document type. Now here we have to give a document type for simulation, SI, okay, and then save it. This SI is a document type which is maintained as document type for simulation, okay. Now for the SI, we have to maintain the number ranges. So define document type for print documents. SI is a document type for which we are given the number range as 01, okay. So 01 is a number range for the simulation document. So whenever the invoicing level outsorting happens, the system will basically not create the regular invoice, because regular invoice is saved, then FICA document will be posted, okay. So there's no question of any releasing, okay. So whenever any invoicing level outsorting happens, it will not create the regular invoice, it will create a simulated document, and simulated document of invoice will not be posted into FICA. Then when you correct the simulated invoice document, release it, it will cancel out the simulated invoice and create a regular invoice, and then posting will happen to financial accounting. So now we will save it. We will go back to one of our existing installation, see any billing can be done so that simulation can apply. So go to ES31. We will check for the outsorting in the billing. Installation for a division 60 to 61. Billing has already happened here up to 22nd. Valid from 22nd. Okay, the billing has to be happened for 22nd onward, and or you can create a new installation. It is better all the way. So same premise I will use to create one more installation. ES31, ES30, 0101, 2019, 60. Premise I will use 243. For testing purpose, same premise I will use 243, and then billing class Jet600, rate category Jet600, ES1 MR unit, and then save it. So 275 is our new installation, 275. And for this we will fix one device. Now last time we created one device where the price class is also maintained. So let us check it. MM60 6001, plant is 6001. It is 299, must be 299. We will just check. So device category 299, 299. Even if it is regular meter, also no issue, but rental value will not be calculated. So here the price class is maintained, Jet600. So for 299, we will create one device. IQ04. IQ01. 299. So serial number is 1199. Our serial number is 1199. So now we will do device installation. One one nine nine. So now we will do the move in EC50E. So new contract is prepared 284. Now how much will be the approximate quantity? So we will use the existing facts. You can easily find out what is the amount billable. So if you go to our billing master data, our energy price is coming to 12 rupees. So assuming that we are billing 800 units, 800 into 12, that is 9,600 plus device rental maybe around 500, lump sum energy maybe around 600, surcharge is around 500. So it will be less than the maximum value. So what we'll do, we will take higher quantity. 800 means it will come to 25%. 800 into 1.25 thousand, 1000 into 12 rupees. So this should come 800 into 25% more we are taking. Okay, it come to, let's say 1.3. We have taken 1.3 and release the metering order into 12 rupees. So it itself coming to 12,480. So it should exceed the amount. So now what I'll do, I'll create the metering order for the January. Go to EL01, installation 275, create, and then we go to January 2020. 30/01/2020. That's the date of metering. Create the order. Now we will enter the results. 275,000. Maximum how much it can go, up to 1,000. Okay. Let's say we entered 1,050 exceeding, but we have released it. Okay. It's not very high. So release without correction. Okay. That means it is accepted, and then save it. Now we will do billing EASI BI 30/01/2020, 30/01/2020, 30/01/2020, and then execute. Billing is completed, but when you see log, it is saying it is outsorting. Okay, that means billing document is created, but it is outsorted. So if it is outsorted, then what will happen? We cannot create an invoice. So if you go to ES31 and if you see the contract is created for the contract account 5301, But when you execute the invoice, this billing document will not show up to 382. So if I'm going to create EA19 30/01 2020 30/01 2020 reconciliation key and contract account, execute. It is showing so many billing documents which we have not invoiced, okay? But this we will use it for joint invoicing. Maybe 2 or 3 billings will take and do the invoicing for testing purpose for the invoice. But here you can see our billing document 5380, whatever you are talking, that is not being shown here, okay? Because it is outsorted. But once you release it, it will be available. So how to release? Release means actually, you see, it's not technically just releasing. The supervisor has authorization to release if the values are within certain range, okay? Otherwise, they have to take the corrective action. Then they have to investigate whether MR result was entered wrongly. Sometimes what happens, by mistake, we might have assigned a price key wrongly to installation, or maybe the billing has happened for 2 months. That means we missed out billing previous month. So this month when you did the billing, it has happened for 2 months actually, okay? Naturally for 2 months, the value will be double, okay? I mean more. So all these practical considerations have to be checked, and then once satisfied, you have to release it. Once you release it, it can go for the billing invoicing. But if it is very doubtful case, very high amount or something, then you have to reverse the billing document. Maybe material has to be reversed, check the interim material order, and then do the billing and then invoicing. So corrective actions depends on the situation. There's no one fixed solution. So here you go to billing and then go to billing execution and then outsorting. Our current billing document will be shown here. So usually the number of outsorted billing documents may be high, because if you're billing, let us say 50,000 contracts in a day, there will be at least 10%, 500. So you can rather search it by the criteria like portion or range of contract account. Usually portion is the best. So we come to know for each portion what are the outsorted billing documents. But here the number of outsorted billing documents very less, so we can directly execute. It will show the list. There are some, but this is a billing document. Right now what you can see, 2382. This is the one pertaining to contract 284, installation 275. The amount is coming to 13,900, whereas it should have come to 10,000 or something. Okay. So now we will select it and then release. Once you release it, this 2382 should be available for invoicing. Right now, when you go to EA19 and then this particular billing document is not visible. Okay. But after outsorting, releasing, it should come. So 23535455 2382 you don't see here. 2380 you can see, but 2382 is not there because it has been outsorted. So now select it, release, document is released. But due to some missing parameters, it will show runtime error, but that is not an issue. It will be outsorted. Now if I go to EA19 30/01 2020 30/01 2020, but it may not allow us to invoice. Why? Because unless we have invoiced the previous billing, it cannot probably. So we will check anyway. So suppose we are doing 5301. So 2382, you can see now it is available. So first deselect all, select only 2382 and then continue. Invoicing is completed. Okay. But we will say we will not go ahead with this invoice. We will apply the outsorting for the invoicing check also. Okay. Now invoice is created already. So I will reverse it. So tomorrow, before checking the outsorting for the invoicing, we will do another exercise, how to reverse invoice, how to reverse invoice, how to reverse billing document, and how to reverse MR order. And in the case of billing, we have two options. Either you can reverse the billing or billing document, or you can also do adjustment reversal. Okay, normal reversal almost the adjustment reversal. So we will finish it. We will hold on this particular invoice, or maybe later we can check one more scenario for outsorting. So tomorrow we will work on the reversal processes, how to do it. Okay. So tomorrow we'll continue.